Hello everyone, welcome back to Upside Down Data. Today I want to talk about how risky it might be to sell crypto in the current moment. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So what I'm showing you here on the chart is our upside downside potential indicator for Bitcoin, which is our risk indicator. And you'll notice it looks a little bit different than usual. And I'll get to that in a minute of what I'm trying to convey with this color coding. So to give some context, I want to talk a little bit about risk, and this is something we've probably all been thinking about a lot recently with the market having a pretty sizable correction, or you could even call it a crash. We're down around 50% from the all-time high that we put in November. And I think there's some interesting things to talk about regarding risk and how we think about it that can put things into a bit of a different perspective. So I think when most of us think about risk in a financial sense, I think we think about it in terms of buying risk. And what I mean by buying risk is this idea that if I'm sitting on some money that I'm thinking about investing, then the risk that I'm worried about when if I'm choosing to invest in a given asset, let's say Bitcoin, for example, what I'm worried about is how likely it is that I'm going to lose money, right? So over some time period that I've identified, maybe it's a month, maybe it's a year, maybe it's 5 years in my time horizon, I'm worried about the likelihood that price will drop relative to where it is right now. So if I'm investing in Bitcoin right now at around, 36K, let's say, it's around where it's trading currently, then what I'd be concerned about is what is the probability that it's going to be below $36,000 at whatever time horizon I care about, let's say a year. And then I also care about, if it is potentially going to be lower, by how much could it be lower, right? If it's only possible for Bitcoin to be a couple dollars, below the price I'd be buying that now, that's not that big of a risk. But if it could potentially drop a lot further, I'd care more. And so from a mathematical perspective, one way that people talk about risk in this sense is with this kind of a formula where you multiply the likelihood of the outcomes, in this case price dropping, by the degree to which it could happen. How much could it drop? And I think most of us, when we think about financial markets, when we talk about risk, this is, I think, what most people talk about. It's the likelihood of the price going down. So if I buy the thing, what's the likelihood that the price is going to go down? I want to mitigate how much the price goes down when I'm holding an asset. And that makes sense, I think, when you're thinking about investing initially, when you don't hold the asset already, when you're thinking of, do I want to put money into the asset? This is a very reasonable way to assess risk. But one thing I think is also important to think about is what happens when you're already holding the asset. Should you be thinking about risk the same way? Or maybe there's other ways to think about it as well. So I want to kind of introduce this other framing that we can use to potentially think about risk once you already hold an asset. And I think this is what is potentially most important to a lot of people right now, because I think most people in the crypto market, you hold crypto assets, and then that's the decision that's in front of you right now is, do I hold or do I sell, right? That's when you hold the asset, those are your choices. Do I hold it or do I sell it? You're not in the position of the buying anymore. You're not in the position of, do I buy with this fresh money or do I hold the fresh money? If you already hold the asset, then what you're thinking about doing with that asset that you already hold is, do I sell it or do I hold it? And the risk that I want to argue exists on that decision then is not anything to do with if the price will fall. It's really the opposite with this. If I'm thinking about, should I sell this asset right now, the risk of selling is that the price will actually increase after you sell it, right? So let's say you had bought some Bitcoin, it's currently trading at 36,000. You're saying, okay, well, maybe Bitcoin's going to fall further, so I'm going to sell now, come back in later and buy it up so I can get more Bitcoin for my money when it's at that lower price. That could happen, but the risk you're taking when you're doing that is that Bitcoin's price won't fall any further than it already has, and in fact, maybe Bitcoin's price would actually go up and will never get lower than where you sold it. That would be the risk that you're incurring. It's the likelihood the price will increase from where you are over whatever time frame you're thinking of, or if you're thinking about selling or reinvesting whenever you were planning on doing that. And then also by the magnitude of that increase, right? And the idea is that if you sell now, you forfeit any possibility of that increase that could happen after this. So if Bitcoin were to suddenly go parabolic, you would be missing out because you'd sold your Bitcoin at that price. But of course, if you had sold and Bitcoin goes down, that would be kind of a gain in a sense, because you allow you to buy back in at a lower price if you weren't inclined to do so. Now, obviously, there's more to think about with selling than just this kind of an idea, right? If there's a sense where you really just need the money out, like you can't afford, literally can't afford for the price to go down more. This is money that you need outside of crypto. That's one consideration. Or if there's some other asset you think you could get a better return out of with that money, that's a different consideration. But I'm just kind of assuming a more kind of controlled thought experiment here, where you don't need this money for anything else. You're planning on keeping it invested or in the crypto space in one form or another at some point. What do you do? And what I want to argue is that the flip side of this buying risk is the selling risk. When you hold the asset, what you need to be worried about is, if I sell now, is price likely to go up from here, making that choice a bad choice? Or is the price likely to continue going down from here, in which case that might be a good choice because I could reinvest at a lower price? And where I think this is a useful distinction is we can look at risk indicators like the upside downside potential indicator, and we can just flip our focus to answer this question. So the upside downside potential indicator, what it assesses is the likelihood, is the extent to which there's more upside or downside potential for the asset at a given point in time. So 5 would be where the upside potential is low, downside potential is high. -5 is when the upside potential is high, downside is low. And you'll notice I flipped the color coding here from what we usually do it. Usually we have red at these peaks here, and we have green during these low periods. But if we're thinking about, okay, if I already hold Bitcoin, then again, the choice that's in front of me is not, should I be, it's not anything about buying if you're already holding it. For that asset you already hold, the choice that you have for that Bitcoin you already have is, do I sell it or do I hold it, right? That's the choice you have for the Bitcoin you hold. Of course, if you have extra money you're thinking about buying or selling, that would be, or excuse me, extra money you're thinking about investing, that goes back to the buy side. I'm talking about the sell side. I hold some amount of Bitcoin, deciding what to do with this Bitcoin. Then we're worried about that selling risk. That's the risk we want to be assessing. We don't care about buying risk for that Bitcoin we hold. We care about selling risk. If I sell now, how likely is it that price will go up from here instead of going down? And so that's why I flipped this around. So green, which we usually denote as low risk, if we're talking about selling risk, then market cycle peaks are where selling risk is the lowest, right? If you sell here, the likelihood of the price increasing from there is quite low relative to the likelihood it will drop. When the UDPI gets to these really extreme levels, it tends to mark these kind of reversal points. So if it's at 5, it means the upside potential is likely exhausted, downside potential is high. That means that your risk of selling there is quite low because it's very likely the price is going to drop. And so you can sell at a lower level of risk at those points. But if you consider these bottoming points, these market cycle bottoms, that's a very risky time to be selling, because at that point, the downside potential has likely been exhausted and there's really just a lot of upside potential sitting there to be realized. So selling at these deep red points is very risky because there's very little downside that's likely to come after that point relative to the upside that could be happening. You expect more upside than downside essentially at those points in time. So if you sell, it's very likely price is going to go up and not down, and that's the risk you're incurring when you're selling. That price will go up and not that price is going to go down. And so I think this is an important framing to think about in the current place we are right now, right? Where the market has been correcting pretty precipitously, pretty steeply. And the question I think a lot of people are asking themselves right now is, do I sell or do I hold? Do I sell hoping price goes down further so I can rebuy in later potentially, assuming that's your intention? Or even just do I sell and just hold the money on the side? Or do I hold? Do I just keep holding my coins hoping that the price will go up again? And if we flip the framework around, we can see that the selling risk for Bitcoin right now is actually quite high. We're down below -3 on the Bitcoin UDPI. And so that suggests that the remaining downside potential that's realistic is pretty limited relative to the upside that's possible. So from the model's perspective, selling here is quite risky because it's quite feasible and in fact, in the model's perspective, probably more likely that at some point in not too long, again, it depends on your time horizon. If you're thinking about just the next couple of weeks, that's a different question. But if you're thinking about the long-term selling risk right now, it thinks that's quite high because in the long term, it expects Bitcoin to be able to realize a lot more upside potential than downside potential. So the selling risk would be quite high right now. And then, of course, with UDPI, if you just flip it, the buying risk would be quite low because, again, buying risk is the likelihood of the price dropping from when you buy it. The lower the UDPI gets, the lower the buying risk would be. But again, we're flipping it here. The selling risk, selling whatever you already have, is quite risky right now. Really, from the model's perspective, if you're going to sell, this is the time to do it back here, up in these zones. It's a lot less risky to sell up here than it is down here. Same for any market cycle peak. It's not very risky to be selling at these levels. It's quite risky to be selling at these levels because price is more likely to go against you than continue to the downside. Now, again, there are caveats to this. This is not financial advice. I'm not telling you, I'm not trying to tell you should hold here, you shouldn't sell or anything like that. And there's also important to note that what we're seeing right now is a lot of weakness in the stock market. You always have to keep in mind those kind of exogenous risks to the crypto market, these risks that exist outside of it. If the stock market goes into a full-on crash, I'm not saying that's likely, I have no idea. But if that were to happen, that could be a total paradigm shift that could really change the ballgame. And then who knows how the crypto market will react, or if these historical trends would continue in that kind of an environment. Bitcoin's only existed in a bull market in the stock market. It hasn't seen a full-on 2008 style crash like we saw back then. So just something to keep in mind with that. You have to keep these models in context. And this model has existed, all of Bitcoin's price history has existed in a bull market. So you always just have to keep in mind that if the stock market were to go way down to the downside, have a massive crash, that could change the crypto markets as well. You have to keep that in mind. But, assuming that doesn't happen, then essentially from the model's perspective, this is a quite risky point to be selling from its perspective. But again, not financial advice. And I just want to show this across some other assets as well. So here I'm showing you the ETH USD long-term upside downside potential indicator. And again, it's showing that the selling risk is getting higher. We're getting down to these lower UDPI levels where the risk of selling becomes greater because the realistic downside potential is lower than the realistic upside potential. And this is the long-term UDPI. So it thinks in the long term, there's quite a bit more upside potential than downside. So you're incurring some risk to be selling here in the long term. Same thing for helium. So we can see here with helium, we're dropping down into these low risk zones again. Same thing for AVAX as well. And so these are just a few that I picked out, but I think they represent the point. The idea that across the crypto space right now, things are really selling off. But the thing is, the more that price falls, the less realistic downside potential there likely is from the model's perspective. And so that increases your selling risk at that time. Now, there are going to be a lot of bears you're going to be seeing who are going to be calling for crypto to be correcting way further than this. Them saying that it's going to be going, Bitcoin is going to go down to 10K or further. They're going to be calling for a lot of alts to just go to zero, not exist anymore. You have to take all that into context. But from the model's perspective, it doesn't think that's very likely. It thinks that we're getting quite oversold in its perspective. And so it thinks that the selling risk is getting higher and higher as we drop in price. Now, again, that's not me advocating for one decision over another. You should make your own choices how to navigate this. But I think it's just another useful frame to keep in mind. That oftentimes we're kind of stuck in that framing of buying risk. We're really averse to the loss. Where we also have to think, though, when we already hold the asset, what do we stand to lose if we sell? And what we stand to lose is the potential upside that could come if we just kept on holding the asset. You've probably heard of the term loss aversion. It's this idea that people are much more concerned about avoiding losses than they are about achieving gains. Avoiding a $50 loss, people actually value that more highly than a gain of $50. It's this kind of avoidance of loss that people dispose themselves to. But the idea is that if you sell an asset that you hold and that asset goes up 2x, you've lost that 2x profit because you sold the asset. You gave up on that potential. So just something to keep in mind. I think it's just a useful flipping of the framing that can be useful when you're making that decision. Because in my opinion, that's really the decision you have to make when you're thinking about selling, or at least the risk you should be considering, is how likely is it that the asset's just going to keep going up from here. And especially in these downturns, I think it's very easy to kind of get into the mindset of, what's the likelihood of it continue to fall, and you're just really focused on the falling. But I think it's also useful sometimes to think about the likelihood of the increase, because that's also a risk. That's a risk you're taking when you sell. Now, again, not financial advice. You should make your own decision, navigate these things the way that makes sense to you. I just wanted to put that out there as another perspective to have in times like these. Now, one other thing I did want to just flip over to really quickly here to wrap up is just what I was talking about with the stock market, because I do see this as being the primary risk to the crypto markets right now from a more macro perspective. I think really the big drawdown that we've seen in the crypto markets has been from these macro factors relating to the stock market and things like the Fed and what they're going to do with their monetary policy. Are they going to actually stop quantitative easing, where they'd be injecting liquidity into the markets? And actually, are they going to start quantitative tightening, where they're actually going to be pulling liquidity back out of the markets? There's actually a meeting that's coming up in the next couple of days where they're going to talk, the Fed's going to talk. There's going to be some indication of what they might be planning to do. That's something, at least in the short term, if we're thinking about, short-term selling risk, that's something that I'm going to be watching very closely what happens with that meeting. Because I suspect that if the Fed backs off on kind of the more hawkishness that they had been, that they were saying they were going to do all this more kind of severe things to try to curb inflation, if they kind of back off on some of that, I think the markets could very easily rebound from where they are currently. Just my opinion. No guarantee that would happen if they express a sentiment like that, but that seems like a very distinct possibility. But there's also the possibility that if they double down on their hawkishness, that people who were kind of not believing them at first or doubting them might then get a rude awakening and then maybe react and try to sell things, which could create more downside pressure. So I think that's going to be an important thing to watch in the short term. But certainly I think if we get a bounce in the stock market, I personally expect a bounce in the crypto market as well. So my thought on that meeting coming up is that if there's a more kind of dovish attitude from the Fed, then the selling risk would be quite high in an event like that, where, if price is going to bounce, probably wouldn't want to be selling at the bottom necessarily. But if the meeting would go the other way, then maybe selling risk isn't quite so high right now if the price could totally tank along with the stock market. We'll just have to wait and see. But I think it's important to keep these kind of things in mind with the crypto market, because unfortunately we're just in a world now where the crypto market and the equities markets are very highly correlated, and it's unlikely for Bitcoin to just be able to just shrug off or totally ignore things that are happening in the broader financial markets. But again, none of this is financial advice. You should make your own decisions. But I just think it's useful to think right now, not only about buying risk, but also about selling risk. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI, we're all going to make it.